Yeah.
Good evening, everyone. My name is Jan Willem Burgers. I'm hosting today with Paul Buitink, and welcome to this episode of Reinvent Money. We'll be interviewing Robert Murphy today. Robert holds a PhD from NYU, is an economic consultant. He's also associated with the von Mises Institute and a well-known proponent of the Austrian School of Thought. Welcome to the show, Bob.
Thanks for having me.
No problem. So maybe we should start there with that idea, the Austrian school of thought on economics. So obviously there's a lot of economists of different stripes, but it might be fair to say that there seems to be a reasonable amount of consensus around what we might call the neoclassical school of thought. Could you give us sort of a general idea of how the Austrian school of thought differs from that? From mainstream economic ideas?
Sure. So the Austrians, and the name, of course, comes from the fact that the founders historically were from Austria, whereas nowadays there are plenty of people in the United States, for example, calling themselves Austrian economists. So it's, in terms of their methodological approach, you'd notice it's very different. That neoclassical papers, for example, journal articles, they'll have a model, a mathematical model. They'll develop some testable implications, and they'll go look at data sets and try to see what happens. So they're definitely thinking that most, I think, economists believe that in order to be scientific, economics as a discipline has to generate testable implications that, at least in principle, could be falsified, and then you go look at what the world generates and to see which hypotheses are better and which aren't. And so especially in the work of Ludwig von Mises, who's probably the most famous Austrian economist, well, maybe second to Hayek, who won the Nobel Prize. Mises didn't think that was the way economic theory should be developed. He thought that economics was a logical, deductive science, so he did agree it was a science, but he thought it was a different type and that it should proceed on a different approach. And so he would just start with the fact that humans act, that people have desires, they use their reason to try to achieve ends, and then you can start spinning out implications of that. And at first it might sound like, well, what could you get out of that? But actually, if you think about it, a lot of people who have studied economics, certainly the layperson who just does a lot of reading on this topic, I think you'll realize that a lot of the insights you have, it's not because some economist wrote something and pointed to a regression. Right, so take free trade, for example. If you've read on that and you understand, some of the classic articles and arguments to show why tariffs make a country poorer on average, or why it's silly to try to protect certain jobs and certain industries with tariff barriers, the arguments are very logical. They ask you, imagine this scenario, and they have you think through something, and then you realize, oh, wait a minute, okay. And so that's a lot of what happens in economics. It's the economists are just saying, well, if we think about it this way, we come to certain insights. And so that's what Mises was arguing, that the core economic theory to develop that framework is more, it's more analogous to geometry than it is to physics. And yet it is telling us something about the real world, that when we think through the logic of minimum wage laws or something, we end up with more knowledge about the real world than we started out with. So it's not just running around in circles and playing word games. We really are learning how to grapple with the world. But Mises again stressed, you can't just look at the data and say, let me see what it tells us. Are there any patterns there? You go in there armed with a framework because you've thought through certain relationships already.
But isn't it true in a neoclassical framework that they also approach the world with a lot of axioms and pre-existing ideas?
Well, yeah, I think you're right that in practice, especially, for example, like Milton Friedman, who's a great free market economist in many respects. He certainly contributed a lot, was a great popularizer for sure, and made many discoveries, especially in terms of critiques of the Keynesian framework. And he wrote a famous essay on what he called the methodology of positivist economics.
Yes.
And he develops, this clearly saying that, what we do in economics is we develop testable implications, and that's what makes our discipline rigorous. But a lot of people have said in practice, actually, Friedman, was doing more of what Mises said. So, and by the same token too, Mises was instrumental in forming a center to study business cycles, and that was certainly an empirical project. You know, they weren't just sitting around in an armchair thinking about business cycles. They were going and getting data and looking at, you know, when do commodity prices boom and bust, and what happens with bank credit in terms of that, you know, during the timing of the cycle. So I agree with you. In practice, good economists, I think, do a lot of introspection and, you know, realize things in terms of avoiding fallacies, which you do just kind of by thinking things through and saying, oh, wait a minute, that doesn't make sense. And then they're also guided in terms of the questions they study by looking out at the real world. They don't just sit in a corner and are ignorant. So, I mean, part of the reason Mises and Hayek focus so much attention on the business cycle is because they could see in the real world what a big deal that was.
Okay. All right. So maybe we should turn to the financial crisis. So I was recently at a debate in the Dutch Second Chamber. We have a citizens' initiative here on our monetary system, and I was there to listen to that debate. And one of the things I noticed is many politicians still coming out with this sort of very common refrain that the reason for the financial crisis was a lack of regulations and basically markets gone wild. I would like to hear your thoughts on this.
Sure. So I think when someone says that, and you're right, that has now become the standard narrative among progressives. When you push them and say, well, exactly what deregulation do you mean? And they can point to certain changes that allowed, you know, commercial investment banking to, you know, to become more blurred and things like that. But it's hard. I haven't seen anyone make a convincing case to show why those changes then allowed the housing bubble, you know, and how if they hadn't done that, then all of a sudden the housing bubble wouldn't have occurred, for example. All right, so it's not clear to me. And also, this is a point that Tom Woods stresses, the major regulators, right, so Ben Bernanke, for example, who was the chief regulator of the banks, if you will, and plenty of other people in various positions in the federal government in 2005, 2006, 2007, they didn't see any of this coming, right? There's plenty of statements that people, if your listeners haven't done so already, I would encourage them to go to YouTube and type in Ben Bernanke was wrong.
Yeah.
And there's a compilation. It wasn't like he was just wrong one time. It just, for years, he was progressively wrong, right? Every time he kept, as the problem in the housing sector kept growing, he kept containing it and saying, well, it's confined to subprime. Well, okay, it's housing, but it's not going to spread to the broader economy. Okay, yeah, we might have a slowdown in growth, but it's not going to be a recession. Okay, yeah, we're going to have a recession, but it won't be awful. You know,
you see a Dutch politician saying, "Oh, it's just confined to the U.S. Nothing to see here."
So, so Tom's point in all that is to say, if the regulators who were in charge at the time and for the years leading up to it didn't see a problem, giving them more power, why would we expect them to have stopped anything, right? It's not that that they saw the problem but didn't have the statutory authority to do something about it, right? So there's that element too, but I think it also ignores the problem, the fact that the way the market economy is supposed to work is it's a profit and loss system. And so yes, there were a bunch of investors who made stupid decisions. And there's a whole chain of things we can talk about as to why did the problem fester and get to be so big, and the ratings agencies were involved. And so a lot of the stuff like that was in that movie, The Big Short, if you've seen that, I'm perfectly happy with. I just think they left out a lot too. They left out the role of the Federal Reserve in pushing down interest rates and spawning a housing bubble. I mean, people might not remember, in the early 2000s, they were calling Alan Greenspan the maestro. And his alleged accomplishment was that after the dot-com crash and then the September 11th attacks, the U.S. economy should have had a pretty bad recession, and yet it wasn't that bad, and housing kept rising. And so everyone was saying, wow, what a great job. The Federal Reserve Chairman allowed housing to continue to rise even though there was a recession. And so, but now in retrospect, we realize all he did was replace one bubble, you know, the tech stock bubble with the housing bubble. So I think it's entirely erroneous to explain all that by saying, oh, it's because there was inadequate regulation. And the last point I would make is, even if there were a bunch of people, private sector actors who made silly mistakes and caused these bad investments, the way you correct that is you let them go under. And so the other firms that were more conservative, they would gain market share, and that would be the reward for their conservatism. But what ended up happening is the people who were very reckless during the housing bubble years, they got to bank their profits and gain market share, and then they were part of the bailouts afterwards. So the government sort of protected them, at least partially, from the excesses of their silly mistakes. So it's the government was doing all the wrong things to encourage these mistaken loans in the first place, and then on the downside, not letting the people bear the full brunt of their decisions.
So the mistaken loans is an interesting point. So I suppose you would say that the interest rates maintained by the Federal Reserve leading up to the financial crisis were probably far too low. And if I'm correct, Austrians actually expect interest rates to generally be too low. Is that correct?
Well, I think I'm agreeing with you, but let me just state it in different words. So for sure, many Austrians thought, and this wasn't just ex post looking back. There were people in real time, during the housing bubble years. For example, Mark Thornton had an article at Mises.org in 2004 called "Housing: Too Good to Be True." And he was predicting, saying this is a bubble, it's going to crash, the taxpayers are going to have to come in and bail out Fannie Mae and Freddie Mac. So he wrote that in 2004, which was really prescient. I was later to the game, but in the fall of 2007, so this was a full year before Lehman went down, I was looking and saying because interest rates have been, once you adjust for price inflation, that real interest rates have been held so artificially low for so long that this looks like we're going to be having the worst recession since the early 1980s, right? And so yes, plenty of Austrians were saying that interest rates during the 2000s were held artificially low, and so in the Austrian paradigm, interest rates are a market price and they serve a function. They help to allocate capital into the proper channels, and so if the interest rate is too low because the central bank's flooding the markets with liquidity, you're not helping the economy. All you're doing is you're misleading entrepreneurs. You're giving them the wrong signal, if you will, and so they're investing in projects that are unsustainable. And so in the Austrian view, that's what causes an unsustainable boom and bust.
And in this current floating rate fiat system that we live under, just assuming you can't change that right now, because my assumption is that you would like companies and people just compete with their own currencies, but assuming we cannot change that for now, what would the interest rate be if you would be the Fed chairman?
Okay, so it's a great question, and you're right. I'm an advocate of free markets, and so ultimately, just like we wouldn't want the government to monopolize the production of oil and to have a bunch of governors sitting around setting the price of crude oil every month, by the same token, to me, it's crazy that the government has such a central role to play in money, and they have a bunch of governors sitting around picking the interest rate. To me, that's crazy. But you're saying, given that we have that framework, what would I do? Well, here, it's not that I can tell you what the interest rate should be. I mean, part of the issue is you let market forces determine that. What I certainly can say is I think it's very distortionary when the Federal Reserve creates money electronically and then goes and buys treasuries and mortgage-backed securities. So if you're saying, given that, yes, there's going to be a Fed and it's got to do something, I think a much more sensible approach is back when they tied the dollar to gold. And so if you're going to insist that the Fed exist and do something, I would say it should let its current holdings of treasuries and mortgage-backed securities mature off and let the balance sheet shrink. And if you want to, then they can start buying gold to be backing up the dollars, and just instead of targeting an interest rate, just target the price of gold, so that effectively going back on the gold standard. That I think that would make a lot more sense if you're going to say there's got to be a Fed and it's got to target something. I would reassure people that the dollar is as good as gold.
Right. But what I always wonder is that, like in a democracy or in a certain geographical area, the people can voluntarily decide to use a certain money of account or like a certain unit of account, which, for example, could be the dollar or it could be Bitcoin. So I don't. I used to be very much also in favor, and I'm still in favor of competing currencies. But I also see the point that people in a certain area can voluntarily, or with the majority, like is also common in a lot of private contracts, decide to get together and fix a certain unit of accounts and create that digitally without backing it other than by just a certain emission schedule, and come to a digital currency that they stand behind. And how does this fit in your worldview? Is this conflicting with your worldview, or does it align with your economic and philosophical framework?
Oh, I'm definitely in favor. I mean, obviously, I don't think the government should take any steps to hinder that. And then beyond that, though, I'm also an advocate of Bitcoin, or cryptocurrencies more generally. I think that the contribution of Bitcoin. So to give the background, Hayek wrote this famous pamphlet called "The Denationalization of Money," where he was imagining private companies issuing fiat currency, because he was saying maybe really we've spent we free market economists have thought hard commodity money is the ideal and that fiat money is bad, but maybe that's just because historically states have monopolized fiat money, and so maybe really fiat money's fine. It's just you need competition and private property, open entry and stuff. And so, but even there, the drawback to his proposal was you ultimately had to trust the companies issuing the fiat currency that they wouldn't just flood the market with it. And so that's, I think, the beauty of Bitcoin and other cryptocurrencies that are built on similar protocols, where you don't have to trust anybody, or at least you get the idea that the trust is much less, that as long as the protocol is obeyed, there is no entity with the authority to flood the market with Bitcoin. So yeah, I'm very optimistic about that.
That's competing currencies. But what if the people of a certain community decide to assign a monopoly on the issuance to a certain group of people, or an algorithm, or anything else? Would that still be fine with you in terms of economics theory or philosophy?
Okay, sure. So it depends what you mean when you say assign a monopoly. I mean, if it's voluntarily, there was a sense in which gold was the world's money, like the single currency, if you will, back under the classical gold standard, where all the major nations embraced gold, and I think even the merchants and everybody in there ultimately agreed that gold was a valid money, and so that wasn't done at gunpoint or anything. That was so. If I would move, I have a certain. I'm a shop in a mall, and then the board of the mall, the directors, they decide that they use cleaning company X to clean the mall. So we voluntarily assign a monopoly cleaning company. The same on a larger scale happens in a country where you decide on a monopoly social security provider, or a monopoly police force, or a monopoly currency issuer. It does not necessarily have to conflict with the market if the participants in that specific market voluntarily decide to assign X to do task Y. Okay, let me just make 2 points. So one is, money doesn't work if only one person's using it. Then it wouldn't be money, right? So the advantages of having a common medium of exchange only work if you have it over broad numbers of people, and so you do need that. It wouldn't make sense if we each issued our own currencies individually. That would be the same as barter. But again, it depends what you mean when you say the community agreeing to something. If the idea is they just all because 80% of the people embrace something, the other 20 actually would have wished it was a different one, but now they say, given that the other 80% are using Bitcoin, we might as well go ahead and use Bitcoin, even though we thought Ethereum was better. But we're going to go. That makes sense, because you need if you want to have a standard and the advantages of uniformity. But if it is instead 80% says, if those 20% don't use Bitcoin, it's not as effective, so we're going to put them in jail, or we're going to tax them if we catch them doing something besides Bitcoin, then I wouldn't agree with that, in terms of morality, but also.
But it really depends on when you enter into, for example, if I enter this mall as a shop owner, I know that if I rent a place there, I need to stick to the rules of the community. So I can then try to hire. Right. I can then try to hire my own cleaning company to also clean the floors. but they would conflict with the existing monopoly provider. And yes, at gunpoint they would chase me out of the mall. But it's because I violated the rules that I voluntarily
just like the mall might say all the signs must be posted in English, or depending where you are or whatever. So yeah, exactly. If there's pre-existing property rights, then the owners can do whatever they want, and that's not so if that's what you mean, then yeah, of course.
And that would be the ultimate outcome of anarchy. I think you end up with people forming communities, assigning monopoly providers for certain services, and you basically end up in a situation where we are right now with countries. It's just the whole point, I think, right now is we lack certain contracts, and that's why we have all these semantic debates about what is government and what is the market. But it just boils down to semantics and lack of certain contracts, because it's just the way it arrived over time.
Oh, okay, I'm all right with that general framework, but with two caveats. One is, as I think you're alluding to there, it's so like with democratic governments, part of the issue is, and this draws on the work of Hoppe, who really spells this out, is that they're caretakers, right? It's not really like the president owns everything the U.S. government owns, or whatever the head of state is. They're only in charge of it for a temporary period, and so their incentives are all wrong. They do things that maximize income at the expense of the capital value of the government assets, and so that's one issue. And then the other one is, I think most people don't agree morally that the government, so if the government claims the right to draft you and send you to war, you could reconcile that with a property rights framework by saying the government owns your body, and so it has the right to do what it wants with its property. But I don't think most people actually think the government owns their bodies.
Nope.
Instead, they think, oh, well, if there's an emergency and the Nazis are coming in, then they can draft us to make sure there's adequate, armed forces. So, yes, there is a way. Like if one person somehow became the owner of planet Earth and owned all the real estate, he could do whatever he wanted and say, get off my land, and kick people into space. And so then it would be the same as if he was a tyrant. But I think in general that market forces, so private individuals, even if they had a lot of discretion, owned a lot of property, I think the incentives would be there so that they wouldn't actually mimic the policies we see politicians implementing today, even if formally you could come up with a way to make that legal.
Okay.
So maybe one more question about Bitcoin and cryptocurrency. So I'm not sure if this impression is true. So correct me if I'm wrong, but I have this impression that there are quite a few Austrians who aren't so enthusiastic about Bitcoin and cryptocurrencies. Do you agree with that? And if so, why do you think that is so?
Oh yeah, you're definitely correct. Yeah, there's a big. And that's partly what I have been trying to do in my own work with Bitcoin, is to explain to the Bitcoin enthusiasts, because there was a point where a lot of them started hating Austrians, like the tech, like the programmers and stuff who were libertarian but not necessarily Austrian. They didn't know that much about economics, and then they were getting all these people emailing them or posting on Facebook saying, "You idiots need to read Mises. Bitcoin can never be money. Go look up the regression theorem, idiots." And so that I was trying to come in to be more diplomatic and say, whoa, you're turning off a lot of people here to the Misesian paradigm. So I don't know if you guys know this, but I have a guide I wrote with Silas Barr called Understanding Bitcoin. So the website is understandingbitcoin.us. There's a free PDF where I develop all this stuff in greater detail. But very quickly to answer your question, the issue is, the stumbling block for a lot of Austrians is that Mises, when he solved some of the problems in monetary theory that came from taking subjective value theory that Menger had developed and then explaining the purchasing power of money, there was a little hurdle, because it seemed to explain why people subjectively value a unit of money, you need to know what's its purchasing power. That's part of the reason you value it, is because it can buy things in the market. And so it looked like you were just moving in a circle. It looked like you were saying, the reason money has value is because people subjectively value it, and the reason they subjectively value it is because money has objective purchasing power. So it looked like you were just... And so Mises broke out of that circularity by looking backwards. And so he was saying, well, no, our expectations about money's purchasing power are formed by what we observed yesterday. And so then yesterday, how did we know? Well, because of the day before. And so he could push it back, but it wasn't an infinite regress. He stopped at the point at which the money was just a commodity in the marketplace when there was barter. And so and economists knew how to explain that part. So that was called the regression theorem. The idea is that Mises was explaining today's purchasing power by going backwards in time, at least logically. So if you've got a bunch of Austrians who, as of 2007, are thinking all money can trace its purchasing power ultimately back to when they were just mere commodities, because even fiat currency, historically, there had always been a period of redemption, and then just the governments took that away. Right, so the dollars, there used to be a point when it was turned in for gold, and the euro was so you always had a historical link back to the days of barter, or at least. But
Robert, let me break in there. What do you think of the state theory of money then? Because there are a lot of people, also David Graeber wrote this book, the first 5,000 years, and there's a lot of anthropological evidence too that, for example, old priests they just used to get a lot of gold because people would just offer it to them, but not on a money basis, but because it was just shiny and nice. And then all these priests were sitting on piles of gold, so then they started monetizing it because they owned it, or they had it in stock, so it made perfect sense for them to start spending it and then asking it back for taxes. So a lot of these people say taxes drive money, like the MMT guys say too, like Steve Keen and all the others. So, but that seems to conflict a lot with the commodity theory of money, or the regression theory of money. And it's just, it seems like there's this huge gap between the two different heterodox schools, like on the Austrians on the one hand, MMT, Graeber guys on the other hand. And so it's, for me as a layman, it's very confusing, because I think it's probably the truth is somewhere in the middle. I think we probably have commodity money instances, but also a lot of states introducing IOUs that started circulating as money, sometimes backed by commodities, but not always, because we also saw, of course, the greenbacks, and there are some other instances as well where it's just pure fiat money, not really backed by anything else.
Okay, sure. So just to finish the train of thought, whether you agree with it or not, you can see how if Austrians in 2007 are thinking that about money, then Bitcoin comes along, which never would have had that period where it was just used as a regular commodity. So a lot of them are saying, no, Bitcoin can't ever be money because it would never had that prior period. How do we know what its purchasing power is? It's completely arbitrary, or it's in a bubble. Okay, so that's where the stumbling block with Bitcoin and Austrians comes in. But now back to your excellent question. So I've battled Graeber. He's called me all sorts of names.
Why the name calling? I just don't know. Some more sophisticated people start doing name calling, but anyway.
So clearly, Graeber knows more about the anthropological evidence than I do. But I got his book and I went through it, and I don't think he actually explained. Let me put you. One of the things I pointed out is, isn't it coincidental that these Sumerian priests or whatever, temple authorities, happened to pick gold and silver as money, the things that are excellent monies in terms of their physical characteristics, when they could have just picked they could have picked something like Bitcoin. They could have just picked integers or something, according to Graeber's story. So to me, it seems like a big coincidence. And do we really have records to be able to distinguish thousands of years after the fact whether the merchants were trading with other people, and that's where money and gold and silver became
for example,
money?
The Spartans, they choose and also some Roman kings, the early kings, they choose iron, because it was plenty and it wasn't monopolized yet by the banking class. And then they just started using iron and putting that as legal tender. So since the people had to pay taxes, it drove the value of money. And of course also the value of the dollar and the euro is especially driven by the fact that you have to pay your taxes in it. So not only gold and silver were used for some of these purposes, but also iron, or in case of the early colonies, even scrip money or
tally sticks as well.
Tally sticks as well, of course.
Right. So I'm not going to be able to handle every historical thing you throw at me and say, oh, actually, I've looked into that. And what I'm saying is the specific cases that Graeber brought up, I was looking at them, and it did not look to me like there was a situation of barter where people didn't have money, and then some authority came in and said, hey, instead of you guys engaging in barter, why don't you use this one good? You see what I'm saying? So, because that's the issue. So it's, clearly, if some conquering army comes in and people already have money, and then they say, we're going to instead insist you pay taxes, and there would be an exchange rate, people could mentally make that calculation. But part of the issue, part of like Menger's critique of the state, and then Mises' critique of the state theory of money, is to say if there was just some wise king that looked around and said, you know, why don't we all trade against this shell on every side of a transaction, you wouldn't know what its purchasing power was. It wouldn't be enough just to say everything must be sold against this shell. How would you know how many horses trade for a shell? You know, so that's part of the issue. I'm not saying it's literally impossible, and I'm sure the reality is much more nuanced than, you know, the simple stories that Adam Smith tells in The Wealth of Nations or whatever. But the point is that there were a lot of logical problems. Like just to say there's credit relations and, oh, these people, you know, owed them this, you know, they owed them 16 cows and they owed them 42, you know, horses or whatever. To go from that to then say, okay, but how do you reduce that to a common unit, a unit of account? It's hard to know how that could happen without them already exchanging against each other. And so I think you do need something like the Mengerian account where these things were being traded bilaterally first, so everyone kind of knew what was worth what in terms of voluntary market prices, and then maybe one of the things over time, you know, everyone kind of just started using it as the standard measure. But to just say someone from scratch said, nope, this is money, I think there's a lot of problems with that kind of exposition. And certainly Graeber in his analysis doesn't lead me to think that he's thought through all the I don't even think he's aware of some of the difficulties.
So let's maybe have one final question before we go here. Maybe it's nice to turn to U.S. politics, because we're also here in the Netherlands getting a lot of interesting tidbits of information about your election. So I'm kind of curious. I'm kind of curious. Who would you find most interesting as a candidate? Who would you associate with most? Who would you find most positive? So let me throw out a bold claim as well. So what do you think of the claim Austrians should support Bernie Sanders?
I don't think so. I mean, with all this stuff, I understand what people would mean by the claim is to say, among the people who are currently, you know, in the media and who are on the national stage, which one is the least despicable, right? I mean, so that's got to be the framework we're using.
That's what I'm thinking.
At this point, I don't even think, you know, I don't think it's very likely Bernie Sanders is going to get the nomination. So in a sense, even he doesn't qualify, because you could say he's not going to be it. And so once you broaden it to say, well, people who might not make it, well, then there's plenty of human beings that I think are better qualified. So, but I don't think it's, to me, I don't think it's my job as an analyst or a pundit or whatever to talk about, you know, of these candidates, which ones are the least awful, and that's why I'm going to support, because it comes off that you're endorsing them.
Okay.
And so, like, for example, as I'm sure you guys know, Walter Block has started Libertarians for Trump. I think that's a very bad idea. I understand what he's saying. His point is, on foreign policy, Trump is less awful than the other Republican people who are still in the race, and therefore that's what. But I would just say, okay, so if somebody asked you which one is the least awful, you can say Trump. But to have an organization and to be like actively promoting that, to me, just confuses people. It makes them think, oh, you know, you don't mind violations of civil liberty. And so with Bernie Sanders, by the same token, to me, it would just confuse too many people if I said Austrians ought to support Sanders because of his views on economics. I think that's just there'd be no reason for me to say that. Me talking about that's not going to make him more likely to become president. You know what I'm saying? So if for some reason I actually had the ability to change by 10% the odds of someone becoming president, then maybe it would make sense for me to put aside my purist principles and think who's the least awful. But I don't have that kind of power anyway. So to me,
you're underestimating the power of this show, and we have millions of life as we speak. So.
Right? Yeah, I'm trying to change your guys' mind because maybe you have the power. But so I mean, is it because of the foreign policy with Bernie Sanders? Would that be the angle to say that?
That would be my angle. Yeah, that would be my angle.
I mean, certainly, what I love about this election, and this really is interesting, is you can see the way the media is going after Sanders and Trump. And I think the reason for that is they are, in a sense, outsiders. And I feel funny saying that because, of course, Sanders is a senator. and Trump is a billionaire who's connected with media and whatever. So it's weird. It's not like they're literally some guy who beforehand was sweeping the floor in a factory somewhere. But nonetheless, there's a sense in which they're saying things that candidates normally don't say, and so it looks like they're not taking orders from somebody, or at least they're playing recklessly. And so I think a lot of the official established organs are concerned, like, whoa, if this guy wins, who knows what the heck he's going to do in the White House. And so they're just kind of recoiling and trying to do everything they can to tell Americans these aren't serious people. It's like Ted Cruz and Hillary Clinton. They're more statesman-like and blah, 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 blah. Yeah.
That's also like Cruz's wife, of course, works for Goldman Sachs, and then Clinton is very, very close with Goldman Sachs, also receiving a lot of donations and speaking fees. And then Sanders is just getting the money from the people, and I think the establishment is grossly underestimating the anger amongst the people about these constructs and about the fact that everyone is bought for. So then when someone comes along funding with his own money or funding with the money of the people, then
Yeah, and I'm glad you brought that up. So I just want your listeners to be reassured, perhaps, that if you see, so many thousands of people supporting Donald Trump or so many thousands supporting Bernie Sanders, I don't think it's really that many Americans are for socialism or want all undocumented Mexican workers to be forced to leave the country. I think it's more they're so sick of the system and they know something is really screwed up and the economy is not working the way it's supposed to, and these are the two people on the national stage who at least are pretending like they care, and that they're gonna do some fundamental change.
And the same with media. I mean, we're getting the offers from Goldman Sachs all the time to sponsor our show. We just say no. We just refuse them and completely fund it with our own money. But so we need a lot of likes, though. Likes and subscribers. That's the only thing we need. Likes, views, subscribers, and positive feedback. So if anyone watching this, please give us a like, give us a retweet. And but thanks so much, Bob, for being on the show. Where can people find you? And I know you have also your own consulting website, consultingbyrpm.com. What else? How can people get in touch with you or buy your books?
Well, sure. So if you go to consultingbyrpm.com, that's the storehouse. Also, I just would say people who are younger and interested in studying Austrian economics, I am at the Free Market Institute at Texas Tech University. We have funding for grad students, so if you want to come to the U.S. and get a master's or a PhD in economics, you should consider our program.
Great.
Awesome.
All right. Thank you very much, Bob, for taking the time to talk to us, and hopefully maybe see you again next year or so.
Okay, great. Thanks, guys.
All right. Thank you very much.